the Trenton Alumni Chapter of Delta Sigma Theta Sorority Incorporated, second session, Making Tax Season Less Taxing for Business Owners, of our Get Bossed Up speaker series. BOSS stands for Business Opportunities and Stand-Up Strategies. My name is Nicole Carmichael, and I am the chairperson of our Economic Development Committee. Tonight, we are collaborating with our awesome and hardworking Greek sisters of the Mu Lambda Sigma chapter of Sigma Gamma Rho Sorority Incorporated to bring you this valuable and pertinent session. Last sorority year, we presented the Get Your House in Order speaker series. Please visit our Facebook page and YouTube channel to review Building Generational Wealth, Taxes 2022 and You, Estate Planning and Funeral Planning and Life Insurance, and From a Renter to a Homeowner sessions. The year number changes, but as we know, life keeps lifing. Now, back to the business of tonight. With a record-breaking number of Americans starting their own small businesses over the last 2 years, many of them will be filing for the first time as self-employed. According to the Small Business Administration, SBA, and the U.S. Census Bureau data, 10.5 million total new entrepreneurs, small businesses, and gig workers have stepped out on their own. However, there are changes to the tax code every year, and self-employed individuals and small businesses owners must be up to date on those changes to ensure filing the most recent and beneficial income tax return. Sora Janelle Hazel is the committee's co-chair and will now introduce tonight's speaker and moderator. Thank you.
Thank you, Nicole. Gary Keel is the owner and founder of Money Management Associates, LLC, a tax preparation and planning services company based in Ewing, New Jersey. Since its inception over 35 years ago, MMA has expanded to serve nearly 600 clients throughout New Jersey, Pennsylvania, and New York. MMA's mission is to deliver trusted and accurate tax preparation services along with 100% customer satisfaction. Gary received a BA from Rider College, now Rider University, an MED from Trenton State College, now the College of New Jersey, and his EDD from Fordham University. He is an active member of the National Society of Tax Preparers, as well as the National Association of Tax Professionals. He is a former tax instructor and trainer for H&R Block and Jackson Hewitt. Specializing in individual and small business tax preparation and planning, each year Gary completes over 35 IRS-approved tax training credits to stay up to date with the latest tax rules and regulations. Gary also has a broad commitment to community service, including the Sustainable Ewing Township Green Team, where he serves as chairperson of the annual Fall Spin Bike Tour, former educational coach for Ewing High School Blue Devils football, a Rider University alumni volunteer and fundraising captain, and is an active member of both Delta Epsilon chapter and Nu chapter of the Omega Psi Phi Fraternity Incorporated, serving as editor to the Oracle and director of public relations. A resident of Ewing, New Jersey, Gary is married to Lenora Keel and has a son and daughter-in-law, Gregory Keel and Jessica Keel. Above all, he is the devoted mopop to his 2 grandchildren, Jameson and Emery. Without further ado, please welcome Gary, and we are so looking forward to your presentation.
Thank you very much for that introduction. As you were talking, I was trying to figure out who you were actually talking about, but I do appreciate, again, having the opportunity to speak with you guys, and well, you ladies, and people who are also in the audience. Last year, as you know, we talked about pretty much individual tax preparation, individual tax issues. And I was really excited to hear this year that we're going to spend some time talking about small businesses, which is one of my real interests in helping folks to develop their business and to do well. So I'm going to share my screen. Sort of the idea of what I'm going to do is probably for about 30 minutes or so to talk about some of the things that I think are pertinent to this year's tax season and preparation for this year, and also for the business owners or people who are thinking about being in business, that it was going to help them going forward. After that 30, 35 minutes or so, I'll entertain any questions that anyone has. I'll stay on as long as you like. I think it's very important to be knowledgeable about what you're going to do if you're thinking about being in business, or if you're already in business. One of the things that I have found over the time of doing tax work and working with individuals who have businesses is that the business owner knows their stuff, but it's all the backroom administrative stuff that screws them up. That many businesses that do fail, it's not because they don't have a good product or because they don't know what they're doing. It's because of the administrative piece, the tax piece that kind of gets in the way of them doing what they need to do. So hopefully tonight I'll give you some ideas and things that you want to think about from that standpoint, and wishing you all well with your businesses and your thoughts about being in business going forward. So let me share my screen. So the outline for tonight, I do want to spend just a couple of minutes talking about some basic tax issues. I think whether you're in business or not, and probably one of the most important numbers is the standard deduction, because the standard deduction will indicate whether you can itemize your tax return or not on the personal side. So I thought that that would be important. And then just a couple of quick things for individuals. Then the rest of the time we'll spend on businesses. We'll talk about Schedule C, which is pretty much your business tax reporting form. We'll also talk a little bit about 1099-K, which I think many people who are going to be in business, or maybe didn't even think they were going to be in business, they're in business, people who are gig economy, gig workers, or people who are doing any kind of transactions through Venmo or PayPal, you are likely to get a 1099-K, and you want to know how to report that. And then some year-end tax planning ideas and some final comments and questions. So filing deadline this year is going to be Tuesday, April 16th. We get an extra day because on the 15th is Monday, and Monday, April 15th is a holiday in Massachusetts. So you'll get that weekend plus a day to do your tax return this year. There is an automatic 6-month extension for people who need more time. Just keep in mind that extending your tax time does not mean that you have more time to pay. It's just giving you more time to do paperwork. One thing I'll note here is that any of you who are thinking about a partnership, then that particular partnership does have a 5-month extension, and you have to file by March 15th. So that's very important, particularly that's not on the slide, but as we're talking about business, if you have a business, a partnership, a corporation, an S Corp, anything like that, you have until March 15th to file your return. So don't forget to do that, because if you do, it's like a $2,000 penalty for filing late. Even if you get an extension, they still want the money for filing late. So that's very important. Some common income items are just things are salary, tips, bonuses, unemployment, pensions, just the things that are basic about income that you're going to receive. So just wanted to throw that out there. Some common not income, life insurance proceeds, workers' comp. People, I've unfortunately this year had several folks, my clients, who someone in their family has passed, and they call me about life insurance. Life insurance is not a taxable item. The only issue you might have with life insurance is that if you take the money and you deposit it into an account and you earn interest on that account, the interest would be then taxable, but the actual proceeds from the life insurance is not. Again, just dependents, that you want to just keep in mind, under 19 or over 24, if they earn less than $5,000, you can still claim them as a dependent. The standard deduction, which is the chart I'll show you in a second, and which is an important number to have going forward, as I mentioned, about whether you're going to itemize or not. Credits versus deductions, it's always better to have a credit versus a deduction. Credit actually comes right off your tax return. Deduction just reduces your income, which then gets taxed. So if you can get a credit on something, then that's what you want to do. Then refund versus liability. If you get a refund, which is nice, but you also have to understand that you're getting your refund most likely because they're holding money out of your paycheck or out of your income in some fashion. And that's okay. If you want to say, okay, I'm going to live on less money through the year, I'm going to get it at the end of the year, nothing wrong with that. And liability obviously means that you didn't have enough taxes taken out. However, if you stay within, say, $500, then the government is not going to hassle you. In fact, if you stay less than $1,000, then the government is not going to hassle you with any kind of penalty if you owe $1,000 or less. So just some basics that you want to just keep in mind. Standard deduction, as I mentioned, for 2023 is for married filing jointly, $27,700. If you are don't have deductions that exceed that, then you're going to take the standard $27,700. If you have things like property tax, which is capped at $10,000, mortgage interest, charitable donations, if those items exceed those numbers, then you could possibly itemize. And if you can itemize, it would be a bigger tax break, most likely for you. So if you're in that situation, you probably want to ask your tax person to go over every possible deduction for you to see if you can exceed the standard deduction. Nothing wrong. What happened when Donald Trump came into play, a lot of deductions that people had, particularly if you owned a home, those deductions went away and it became all a part of a standard deduction. So it's very difficult to itemize, but if you can, particularly people who are single and they own a home, they probably can itemize and get close to it. But other than that, most other people are not going to be able to itemize the deductions, but it's a number that you need to keep in mind going forward. Okay, so for the individual, as I mentioned before, if your child is under 17, you get a $2,000 tax break. And the key thing with that, they have to be under 17. They can't be 17. If they're 17, you lose that $2,000. Education credit, you can get those things if you have kids who are in school, or if you're in school, you can get an education credit up to $2,500. Even if you're taking classes that are not necessarily leading to a degree, but a specialized training, which again is something we're going to talk about briefly. If you're going to be in business, you might be able to get a $2,000 tax break on that as well. Earned income tax credit, some of you may be familiar with that. You can get up to $600. Actually, for $600 with no children, $7,400 if you do have up to 3 kids. Student loan interest is $2,500. Residential energy credit, this is important. I just want to share again that this year, if you are getting some work done on your house, air conditioning, roofing, insulation, windows, doors, you can take a deduction up to $1,200 on your tax return. There are some limitations, but it is something that you want to think about. And at one time, it was a $500 cap, but that cap is now over. It's now $1,200 a year. So every year, even if next year, if you're thinking about doing some work for your house, your personal residence, you can possibly take a deduction. If you have rental property, it's a $25,000 deduction. If you have a loss, if your income is between 100 and 150, if you sell your home and you haven't sold in 2 of the last 5 years, you can actually take the gain up to $250,000 for a single person, and $500,000 for married filing jointly. And again, you want to keep in mind, it's not what you sell the house for, it's your gross profit. If your profit is $250,000 or less, no taxes, single. If your profit is $500,000 or less, married filing jointly, no taxes. Big thing this year is electric vehicles. There is a credit to $7,500. So if you're thinking about buying an electric vehicle, now's a good time. I mean, electric vehicles are $65,000, $70,000, but you can get a credit up to $7,500 for an electric vehicle. If you do electric vehicle through the business, that's great because you can take that off as well. But again, just keep in mind that there is a deduction for that. Retired military, I thought I would just throw that in there. Retired military is no state tax if you're a retired military. IRA contributions, I put that in there, I figured because there may be some people thinking about some investments. And when we talk about Schedule C, there is a line that you can do some investing for your business. So those are just some individual things I thought would be of interest to people. Now, small business, that's kind of where we are today. There is what's called self-employment tax. And self-employment tax includes your Medicare and Social Security tax for any earnings over $400. So where if you were working for someone, your employer pays half your Medicare and half of your Social Security. But when you're self-employed, whether you're a partnership or you're individual, and you make over $400, you're going to have to pay your self-employment and I'm sorry, you're going to have to pay your Social Security and your Medicare tax 100%. And that's 15% actually of your earnings. So just want to keep that in mind. If you're earning whatever, any profit that you make, at a minimum, you're going to have to pay 15% of that on taxes for yourself, for your Social Security and Medicare. The annual mileage rate, if you have a business, is 65.5 cents per mile. You do need to keep a log to verify that you have done what you've done while you're out working. The people ask me sometime, which is true, that can I take expenses for my car, oil changes, the car payment, the insurances, etc. Yes, you can, but you can only deduct the portion that is business. So say, for instance, you bought a vehicle and you use it 25% for business. Then those expenses that I just mentioned, you can only take 25% of them. However, 1 mile is 65 cents. So 10 miles that you drive is $6.50. 100 miles is $65. So you can see most likely taking mileage for your vehicle when you're using it for business is almost always higher than taking your expenses, unless you use the car or truck or vehicle, or whatever, for more than 50% of the time for business. So, and even if you do the more than 50% for business, or you use it, that doesn't have to be 50%, just typically 50% perhaps could give you a bigger deduction than taking mileage. You still have to keep records. Where'd you go? What did you do? Who'd you see? Why did you go? How long you stayed? You need to keep those in some kind of track, either on a logbook or in your on an app or something, because if you get audited, hopefully not, but if you do, it's those kind of things that the auditor wants to see. They want to see really good record keeping. Quarterly payments. If you earn money, even through the gig economy, you do, in my mind, if you're going to make more than $1,000 a quarter, you should be thinking about doing quarterly tax payments, unless you're also going to continue to work. If you're going to continue to work, which is great, then you want to probably make some adjustments on your W-4 at the job to make sure that they're taking out enough taxes to cover your earnings from your gig work or any work that you might do on a quarterly basis. If you think about it, when you work and you pay taxes through your paycheck, your employer holds that money and pays it quarterly for you. So it's the same concept. You just have to do it for yourself. But what happens many times, again, with new business owners, they don't think about that part of it. They just working, making some money. They're not thinking about paying it quarterly. But if you don't pay it quarterly, there's a possibility of a penalty that the IRS will assess you. And now we're also, keep in mind, we're talking about income taxes quarterly. Depending on the kind of business that you have, there may be sales tax quarterly as well, particularly if you have items that are being sold and New Jersey wants their sales tax. So just keep that in mind. Now, I'm not necessarily proficient in sales tax, but what I tell people is that you can go to the state of New Jersey and they will tell you what items are sales tax required. And whatever kind of business you have, it will tell you whether you should collect sales tax. If you collect sales tax, then obviously you're going to send that out as a deduction. You don't have to pay double taxes on sales tax, but you do need to send the sales tax into New Jersey on a quarterly basis. So just keep that in mind as well. Business usage of your home. A lot of people take this, particularly if they're small businesses and they're working out of their house. You can take a percentage of your home for business. If you have, say, 5 bedrooms or 4 bedrooms, and you have a utility bill of $100, and one of those rooms is used for business, you can deduct $25 off your tax return because 25% of that utility is a business item. Same thing with your property taxes, same thing with your mortgage interest, same thing with your sewer bill. So there is a possibility for you taking expenses for your office and home. The key thing there, again, is good record keeping. How many rooms you have in your house, how many rooms you use for business. And when you talk about rooms, it's living room, dining room, kitchen, bedroom, cellar, if you have a finished basement, but not bathrooms. Okay. Another thing when the office and home expense for small businesses is that if you happen to do landscaping at your home and you have, again, one room that is used for business out of 4, you can take, and I'm just using landscaping as an example, you can take 25% of that landscaping expense against your business. Now, if you didn't have a business, you couldn't take any of that against your personal. So again, it gives you some idea of the advantages of having a business, particularly if you have it in your home and you're keeping good records. Same thing conceptually, if you get a new roof on your home and you have 1/4 of your home is business, 25% of that roof expense is a business deduction. If you did not have a business, none of it would be a deduction, unless you were able to use some of the energy savings credit, which again is the maximum is $1,200. And that again is even with limitations. So having a business in your home is a good thing. Keeping good records is absolutely imperative to take an office and home deduction. Hiring your children under 18. This is a good one. If you have a child under 18, not 18, they have to be under 18, then you can deduct their salary against your business. So they can earn up to $13,000 and pay no taxes. So let's look at this for a second. You have a 16-year-old who's in your home. Maybe they're doing some paperwork for you. Maybe the kids today, they certainly know a lot more than we do about computers. So maybe they're your internet expert, or they're your Facebook person. So you set up an account for them. You have them sign in as a timesheet. You have them do an application, which you can get online. You can go to Staples and get an application, or you can make up one on your own. You have them fill out the application. You have them do a timesheet. You set up a pay scale, like $15 an hour, whatever it is. They come in, they sign out. You issue them a paycheck, a company paycheck, not a personal paycheck. So again, going back to what you need in terms of a business checking account, give them a business check. Now, at the end of the year, you're going to claim that as, or you're going to deduct that as income to your child. No problem. That's a deduction for you. Turn it around. The child makes $10,000 of your money, and you ask that child to set up an IRA. So therefore, there's no that way you get your child started with investing. But the bottom line is there's no taxes on that money that you earn up to the $13,000, because the child is going to write that off as a part of their standard deduction. But using your child is a good deduction that many small business owners do not take advantage of. And because they think of their child maybe is 10 years old, they can take out the garbage. They can do any number of things in your office for you and make a reasonable salary, not something that's crazy and exorbitant, but something, if you can deduct $4,000 or $5,000 off of your business income with no taxes and keep it in the house, maybe have your children, like I said, either set up an account or use your children's money to buy the groceries. I know they would be excited about that, but something you could think about. So use your child. The difference between hobby and business, this is critical. A hobby is just something that you just happen to do for fun. It really is not necessarily something that you're trying to make a profit. However, if you do have a sale in a hobby, you do have to claim that. So you have hobby expenses that offset your hobby income, but you can't take it as a loss. You can only take it as a break even. So you have a hobby, maybe painting or something like that. You make $1,000, but you have $1,000 of expenses. Then you basically come away with the zero, but you still have to report it. Now, say you have $1,000 of hobby income and you only have $200 of expenses, you actually have to pay taxes on that $800. So that's a hobby. Now, with your business, if you have a business and you are keeping good records, you're setting up a business account, you're having expenses that are required for your business to run, then you can actually take a loss. And taking a loss on your business is a good thing because you can offset your regular income which then in turn gives you a bigger tax deduction. So having a business is kind of what we're talking about tonight, but you want to make sure you're keeping good records about, showing the government that you are in business. Typically, you should try to have a profit 2 out of 5 years, not absolute, but typically that's what you should be striving for, to show the government that you have trying to make money. Now, there's some companies, that take years before they make money, but for small businesses, most likely, again, you should be trying to make a profit 2 out of 5. I tell this to my clients all the time. I know many, many businesses are cash transaction businesses, and I wouldn't tell anyone not to report their cash. But don't think the government is not smart to realize that you are in business, you're showing a consistent loss, but you live in an $800,000 home. Let's be realistic. Or you drive around in a Mercedes. The government is not stupid. So if you are making money and you want to keep the government off your back and you want to be honest and upfront, which is what I would say to any of my clients, you do want to show that profit when you can. Additionally, I have clients that have come to me after having taken losses for a few years, and now they're ready to buy a home. And the mortgage company is saying, hey, listen, you're not, your only source of income or your big source of income is from your business, but you're making no money. So of course they're stuck at that point, because you can't go back and, well, you could go back, but then you open up to scrutiny. If you go back and say, oh, I made a mistake, now I want to amend the return and show that I made a profit. You can do that. It's not illegal, but it just opens up to the government saying, hey, listen, you've been working this business for the last X number of years, and now all of a sudden you need to go back and show that you made a profit. They, again, like I said, just keep in mind that the government is not crazy. And one of the things that they look for very much is the lifestyle audit. If your lifestyle is not meeting your income, or if your lifestyle is exceeding your income, it's a red flag. So I tell clients, if you need to pay taxes a little bit at the end of the year, so what? Don't you want to keep the IRS off your back? I certainly do. But again, I'm not going to cheat. I'm not going to encourage clients to cheat or anything like that. But I would say if you do have a profit, pay the taxes, call it a day, do something better next year to maybe change the situation. Okay, so I'm going to talk about a Schedule C in a second, and which is where you're going to report your income. You're going to pay yourself, which I have an attachment. I'm going to talk about paying yourself as a sole proprietor, which is interesting. I'll stop there for a second. Most sole proprietors think that, or when they start out, they think that their business is different than themselves. But as a sole proprietor, you are the business. So you do not give yourself a W-2, you take what's called a draw. You just take money from what you've earned and you do whatever you want to do. But that's how you pay yourself. You don't pay yourself with a W-2 because you're not an employee, you're the owner. So that's how that's done, that you're going to pay yourself through a draw, which I'll show you in a second. The last 4 items, again, I'm going to go pretty quickly because I want to come to Schedule C and the 1099-K. Most small businesses are going to report their income and expenses on Schedule C, which I'm going to show you in a second. Other people can reporting money that they are earning on what's called a 1099-K, and that also has to be reported sometimes as a business, sometimes as a hobby, sometimes as a capital gain, which I'll show you in a second. Okay, so Schedule C. Schedule C is pretty straightforward. I have lined in where you're going to put in your income, and you can see the different things that you can deduct. You can deduct advertising, you can deduct supplies, you can deduct repairs. If you're renting or leasing facility, particularly if you're renting a space or you're renting a PO box, you can deduct that as an expense. You can also deduct if you have utilities. You certainly could deduct that as a possibility, but typically that would be something you would get on your office and home expense, which you would find on line 30. You see a line says office and home expense. That's where you would take that number. So, and then on the other page, page 2, is an area where it says other expenses are things that are not necessarily listed as standard, but you have some expenses. It might be uniforms. It might be insurance that's different than the insurance that's on the front page. It might be software that you purchase. It might be computer equipment that you purchase. So those would be all things that would be listed under other expenses that you could deduct against your business income. Also, if you look at part 4, that's where you would deduct your car expenses, or your mileage expenses, I should say. And that's where we would pick up your 65.5 cents for your mileage if you were driving your vehicle for business. So that's your Schedule C. Even though it says 2021, it's still the standard Schedule C. It might be 1 or 2 lines that are different in terms of numbers, but the information is there as is. And that's what you want to think about when you are completing your tax return. It's pretty straightforward in that you're basically doing what's called a profit and loss statement. Your profit is all your income minus all your expenses, comes down to whether you have a profit or a loss. So that is called a balance sheet. Your balance sheet is going to be all your income minus all of your expenses. That's called the balance sheet. And then at the end, it's your profit and loss, whether you have a profit or loss. If you have a profit, it goes over to your 1040 as business income. If you have a loss, it goes over to your 1040 as a business loss. And that business loss is then deducted off of your regular income. If it's a profit, then keep in mind, as I said earlier, if you have a profit on your business, you're going to have to pay income taxes, and you're also going to have to pay self-employment tax. That is your Social Security and your Medicare. So you got 2 taxes that have to be paid, but they're paid with your tax return, which is pretty cool. You don't have to think about it anywhere else. Okay, that's Schedule C. Okay, now 1099-K. There is not going to be, I shouldn't say, it's not going to be unusual for people to receive a 1099-K this year. Anyone who's doing Uber, who's doing DoorDash, who's doing Venmo, who's doing Airbnb, those people, those credit card companies are going to issue you a 1099-K that then you have to do something with. You either have to pay the taxes on it, or you have to show the deductions on it. Again, that is shown on your 1040, but just in a different place. You can see where it says gross amount, line 1A. That is going to be all of the earnings that you have from, it could be Ticketmaster. I have a Ticketmaster account. I sell tickets for basketball games I can't attend. And Ticketmaster last year, and this year I'm sure, sent me a 1099-K. So it shows that I had a gross amount of, I don't know, $3,000. But I didn't make $3,000 because I lost money on those tickets. So that loss has to be shown. If not, then the government's going to look for you to pay taxes on that $3,000 in that particular example. And your 1099-K info is going to be reported on Schedule 1, Part 2. No, I'm sorry, Schedule 1, Schedule 1. I'm sorry, it's just interchanged, my mistake. On Schedule 1, Part 1, which is where your other income is, that's where you would put your 1099-K info. If it was a hobby, or you was like Venmo or something along those lines. If it was Uber, DoorDash, you would put the income on that line Z, Part 1Z, $3,000 or whatever it might be. And then on, again, Z of Part 2 was where you would put your expenses. Okay, so if you had all expenses, of course, you still put in $3,000 to offset that income. If you only had $2,000 of expenses, you put the $2,000 there, and you had to pay taxes on the $1,000. So don't be surprised if you're doing Uber, DoorDash, Airbnb, if you're using Venmo, PayPal, Cash App, if you're doing any of those things for something other than your personal, like you're paying a friend or a friend is paying you, then you're going to get, most likely, you're going to get a 1099-K. It's going to have to be reported somewhere. And the way that it's reported currently is going to be on Schedule 1, either Part 1, which is income, and Part 2, which is the adjustment. This is, again, just a little chart showing you how you would be paid if you are a sole proprietor or a single member LLC or a partner in a partnership. Now, let me start there for a second. If you are a partnership, the partnership does not have to pay any taxes. The partners pay the taxes. They are issued what's called a K-1. If you think about your job, your regular job, at the end of the year, you get a W-2. No problem. For a partnership, those partners get what's called a K-1. The K-1 then gets reported just like your W-2, and you report that on your 1040. Your K-1 then gets reported on your 1040, and you pay taxes. So the partnership is only a reporting document. That's it. It doesn't pay any taxes, but it does have to report. Now, again, keep in mind, if that partnership does not file that reporting document by March 15th, there is a $2,000 per partner penalty to the partnership. I've had several people come to me because they set up a partnership. They thought they had to do their taxes April 15th. No problem. Their personal was due April 15th, but the partnership was due March 15th. So, of course, they had to write a letter saying a mistake, blah, 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 which the IRS typically, the first time, they will give you a waiver. But you don't want to deal with that. You want to know that March 15th is when you have to file, or you can request a 5-month extension. Not a big deal, but you have to do it by March 15th with a partnership. But again, when you look at how you're going to pay yourself, if you are in a partnership, your partnership does that balance sheet that we talked about, come up with the income, and come up with the profit or loss. The profit, if it's 2 partners, they get split. If that's the split, it could be a 60-40 split. It doesn't really matter. But whatever the split is, one partner gets their portion, the other partner gets their portion, and it reports it on their individual tax return. But that's very important with a partnership. Let's see, anything else I want to say? Okay, so that's the part. Now, the partnership, let me also mention, where you, as an individual, you do a 1040. That's your tax return form. The partnership's tax return form is a 1065. If you are in a corporation, which could be a regular corporation, or which is called a C Corp, or an S Corp, which then has shareholders, then you would do what's called a Form 1120. Same thing, the corporation still has the March 15th deadline. The partners still pay the taxes through a K-1 if it's an S Corp. If it's a C Corp, if it is a C Corp, the corporation then does have to pay taxes. And their tax liability is typically much higher because their tax rate is higher than the individual. But that's if you have a C Corp, it's just like any other business that has a C Corp. That has a business. Let me also mention here about LLCs. A lot of people think that I'm going to have an LLC, Limited Liability Corporation. It's a nice thing to say, but your liability is almost as high as being a single person with a small business self-employment. The LLC, particularly if it's a single member, keep in mind that LLC is you. In the world that we live in, don't think that those attorneys are not going to come get you individually for an individual LLC. Now, they might say, okay, we're going to take all the business assets first, which is fine, but they're not going to stop with the business assets if you still owe $1 million or $2 million or whatever it is on some issue that is out there. So don't get the impression that the LLC gives you super protection. Many people who have LLCs also have some kind of umbrella liability policy, which is a good thing. It's not the greatest, but it's better than having nothing. People certainly, depending on the kind of work, they have E&O insurance, errors and omissions, which helps as well. So I'm saying all this to say, don't start your business without some kind of insurance to go along, some kind of risk management process that you know that you can do. If you're going to have employees of any sort, even if you're going to have your child, as we talked about earlier, you probably want to have workman's comp. You never know if someone might slip or someone might say they got something bad from you in some way. You want to, I mean, your employee, I should say. So you definitely, particularly if you're going to be in any kind of restauranting or cooking or anything like that, because anything can happen in that kind of setting. So you want to have workers' comp. But you want it, bottom line, you want to have some insurance, and don't think LLC is going to be super protective. If you want to be super protective, then do the corporation. If you want to do the corporation, it's just going to cost you more money. It's going to be more paperwork. But if you're worried about really being covered, you want to do the corporate side. That will be the thing, because in that case, then if they sue you, if you get sued for something, they will definitely only take the corporation. And then, of course, I'm sure lawyers will figure out some kind of way to try to attack you personally. But with the LLC, they definitely will do that. So don't let that be something that's just you think is going to make it okay for you. If you get a 1099-K, this is just a nice chart. Just shows you where information is reported. Again, the hobby would be on Schedule 1. If it's an actual trade or business, like I have a business and I get a 1099-K from my credit card company because I do a lot of transactions with people paying me by credit card. It would go to my Schedule C. If you are selling personal items, like say, for instance, you got some dishes and you want to sell them online or you want to sell them through the marketplace, and that item is $100. That item, there is no deduction for that. You have to claim that entire $100 as a capital asset, and that would go on Schedule D. So that's a difference. If you're selling a personal item, you cannot take your expenses. You can only take your expenses if it is something that is related to business involvement in some way. Okay. All right. But again, it's a good chart. And if anyone wants this chart, if you think that you're doing some sales, I'll be happy to send it out to you. It's not a big deal. Be happy to do that. Or anybody want to come in and talk about it, I'd be happy. Send me an email. I'll be happy to do that as well. Some non-bank related funding and key personnel. Now, I'm sharing this with you folks because I started my business on a credit card. It was a 0% credit card. Not many of those around anymore, but it was at the time. And I was able to do all the things I wanted to do, buy all the equipment I wanted to buy all the furniture I wanted to buy. And I was confident enough in my business that I was going to make enough money to pay that off before it became due. And I did. And I was really excited about that. The other thing, so if you can find something like that and you think you've got a good business going, then use somebody else's money. Why not? Just be prepared to pay when it's time to pay. But along with that, what I explained to some people is that with your credit card, if you look at your ending, your closing statement, and your closing statement say is December 7th. And if you can buy something on December 8th, you actually have 60 days to pay that off, because that closing statement goes into the next month, which they didn't give you 30 days. So if you can be smart in your purchases, you might want to think about, if you know your closing, if you're going to use a credit card and you need a little extra time, then look at your statement closing date. And if you do like maybe the first week after the closing date, you're going to actually get almost 60, you're going to get 45 to really a little bit more, at least close to 60 days to make that payment. And for a small business with cash flow, that might be a good thing to do. County, state, SBA loans and grants. Now, I'm not going to brag, but in 2 years, I've gotten $85,000 that I do not have to pay back from the county, state, and SBA loans and grants. $85,000, zero interest. I shouldn't say I don't have to pay back. Zero interest. Let me quantify that too. $35,000 of the $85,000 is zero interest. I get 5 years to pay it off. 35,000, zero interest. You hear what I'm saying? Zero interest, 5 years. Someone gave me $35,000 for me to buy equipment or whatever I needed. The monthly payment is $333 a month. That's it, no interest. The other 50,000 was a 2% loan for 10 years. If you make your regular payments for 4 years, they wash the rest of it away. 2%. So if I make payments, which I am going to definitely make, I'm going to make my 4 year worth of payments. After 4 years, they'll wash the rest of the money away. You can't beat that. So I say that to say is that don't forget about using the county, state, and SBA for loan money, for money that you might need. And like I said, the second 50,000 really is like a grant, because again, as long as I make the payments for 4 years, I don't have to pay any more back. So it's really 4 year note, and for crazy money in my mind. For a small bit, for a person like myself, one person, I have 5 staff. I'm open basically just 6 months out the year, and I was able to get all 3 of those items: the 2 0% loans, and the 1 2% loan with no payback after 4 years. The key thing with that, though, and I've shared this with a number of people who have small businesses, some like not tax businesses, but small businesses. But the key thing is you got to have your records. You can't go to particularly the government without records. You really can't go anywhere without records. That's your tax returns, your profit and loss statements, your insurance documents, your formation documents, your bank account set up in your business name, if you got a credit card in your business name, if you got a mortgage in your business name, you need to have your records. So when this, because again, the last 20,000 that I just got just this week, today is Wednesday. The program was out on Friday of last week. Monday morning, they had all of my papers, because I went to my drawer. I knew what they wanted. I went to the drawer. I put it out. Now, maybe I was one of the first people, or maybe not. But the fact that they didn't have to call me for anything. Everything that they wanted, I had right on the spot. And 2 days later, they telling me that the loan is approved, and I should have it by early next week. So that's a nice thing, but you got to have your records. Another thing that you can think about doing is using your equity in your home. Not the best, but certainly, again, you don't have to, if you have a home equity line, I would say probably get that anyway, just to have. And you can use that money to help offset business, some of your business if necessary. And then, of course, you can do venture capitalists. There are a lot of people who will lend you money. That's their job. That's their work. You can look up online for different venture capitalists. My son is into real estate, and he's pretty much uses venture mortgage people to do all of his banking, because he don't have to deal with all the different things that a normal bank would want to have, which is okay, but again, it's just more time consuming. Little note that I have here is that you never want to use personal money to pay business expenses, other than, like I said, I can see the equity line perhaps, because you need the cash to do whatever you want to do, but you do want to use business money to pay personal expenses, because that's why you're in business. You make money, you want to go buy a car with the money you made. You made money, you want to go to the movies. You made money, you want to go buy a refrigerator. I mean, that's why, but you don't want to have to use your personal paycheck to go buy a piece of equipment for your business. That's not what you want to do. You may have to, but you want to try to use other people's money as much as possible for your business. Some key people, I think everybody needs to have: a good banker, an attorney, a risk manager, or somebody that you can go to for insurance, and an accountant, bookkeeper. Those people are critical for any small business that's going to do well. My banker is really, really, really a top-notch person. I've been dealing with them since I opened the business. They call me when something special is happening. If I make a mistake and I write a check that needs to be covered, they'll waive the fees for me. But I got a lot of money in their bank too, and I've done a lot of money in there, a lot of transactions. So they know that I'm good for different things. I got my mortgage to them. I have a business mortgage at 4.7%. It's unheard of. 4 point, and that was 4 years ago. Even then, 4 years ago was 7-8% for a business. But I had a good banking relationship with my banker. I knew them on a first name basis. At the end of the year, I even took the staff and the banker. I bought them a Panera lunch. I mean, you got to do stuff like that to maintain relationships with people who you want to do work with. So just some things you want to keep in mind there. Some final comments. Make sure you have an IRS account. IRS has a lot of good information. This information I presented is accurate as of this day, as of 2012-13-23. Congress can still make changes, so you never know, but that's where it's at right this second. Everything you want to know about the 1099-K, and if you're going to get that, I would highly recommend that you go out to the IRS website, because what I covered today was just, small potatoes, but to really find out and how it's going to affect you and your business, you want to go out to the IRS and do a little research. And again, if you have questions, I'll be happy to answer them for you. But I would say you want to do that. And then that's it with me. So I don't know, that's well, it's more than 30 minutes. Sorry about that. But I'll stay on. So I'll answer any question anyone has. So go right ahead. And I thank you very much for allowing me to talk.
Hi, Gary. There's a few questions in the chat.
Yes.
Okay. Can you take the energy credit based on the year of sale or install? For example, if you purchased in 2023, but installation is not until 2024.
It's the year installed. That's a good question. I just came from a conference about that, but it's the year installed.
Yes. Okay. Does buying a rental property in a business name, for example, LLC, exempt you from capital gains tax when you sell the property with a profit? Also, does the depreciation deduction work differently for individual owner versus business owner on a rental property?
The question goes back to, is the business owner the owner? Is the LLC the one person? Because if the LLC one person, then it's not going to matter. It's going to come to that person anyway.
Okay.
So now if the LLC is a partnership, that's different. But if the LLC is the person, like they have a single member LLC and they just put the property into an LLC and they're the owner, then it's going to fall to them anyway. And depreciation is not going to change. And because it's a rental property, you can't push the money forward. You're going to have to pay the capital gains no matter what, because it's a rental property. The only way you don't have to pay the capital gains is if it's a personal property.
And one more. Do all LLCs have to file if there hasn't been any income?
Well, I would say yes, because in New Jersey, if you filed correctly and you formed a business correctly, every year you have to pay an annual registration fee to New Jersey. This year is $75. That $75, whether you made money or not, is a deduction on your Schedule C. So if you have no income and you bought some supplies and you have to pay this registration fee, then yes, you want to file and take those deductions. The issue again is that if you do that, which is no problem, you want to try to make a profit 2 out of 5 years. But you can definitely take those expenses, whether you made money or not. As long as you have the formation, as long as you formed a business, you paid the registration to New Jersey annual, you got your EIN number, you got your bank account, so you're showing that you're in business, you just didn't make any money that year, then whatever expenses you had for that year trying to make money, telephone calls, maybe you visited a couple of clients, you just didn't get a sale, maybe you had to take a course to stay up to date on knowledge and what's going on, those would be all deductions you can take, even if you didn't make any money. You just want to try to have a profit 2 out of 5 years.
Okay, that was the last question. Thank you.
That's it. Okay. I'll stay on, folks. I'm sorry I went so long, but there was a lot of stuff, and I'm really into small businesses, y'all, and it's really the way to go. And I see so many small businesses start, but they stop or they fail because they don't do the administrative side. Most small businesses, they know how to make cookies. They just don't know how to manage the money. They don't know how to manage the books. They don't know how to manage the marketing. They don't know how to manage, the insurances. They know how to cook the cookies, or they know how to make the widgets. But and I don't know how to make none of that stuff. But I do know how to do the administrative stuff, and I stay in my lane. I know what I do well. I know what I can do, and that's kind of how I operate. Those were good questions too, by the way.
Are there any other questions from the participants at this time?
How can I ask? How many people? I don't know, through a raise of hands or through the chat. How many people have started a business already? Two, 3. Okay, so I hope some of the information I gave you, 4, 3, 4. I hope some of it was helpful to you then, or maybe something you knew already. Or even, in fact, maybe the people who have the business with their hands up, maybe is there a tidbit of something that they can share about, taxes and or reporting that maybe I didn't cover, or they can share with everybody on the group? Anyone? Don't be shy.
Eric, can I just say, the March 15th deadline that you talked about, I absolutely made that mistake the first year, and I have a small business with 4 other people, and got that $8,000 penalty and that, or whatever it was, and it was like, please, we did not mean to do that. We didn't understand that, so
Sure.
that's very important.
Yes. Were you working with someone, or you guys just had started on your own?
We basically had started on our own, and
Yeah. Because if you're working with someone, it's really, I'm not gonna say it's their responsibility, but if somebody you're working with, they should be sharing that kind of stuff with you. But yeah, I appreciate you saying that, Janelle, because it's it happens. It definitely happens, and you have all the best intentions. You weren't trying to cheat the government, anything like that. You just didn't know it was a different deadline. Anyone else who has a business that could share anything?
I have a business, Gary, and I have a question.
Okay.
How do we get in contact with you besides the email? Is there a website?
Yes. My
Okay.
website is mmataxpro.com. In fact, on my website, there is a section specifically for business. Like a lot of stuff I didn't cover. And there's a lot of good stuff in there. Kind of record keeping, whether you should be an LLC or corporation or sole proprietor, how to manage your kids, what things are deductible. There's really good information on my website, mmataxpro.com, and look under services, or I think it's services for businesses.
Thank you.
All right, great. Who else is doing some good business work? Come on now. You got me here. I'll answer your question. I've been in business 35 years. I got a small business, and I have about maybe 20 or so small business people doing it. In fact, the most interesting small business I work with, I have a guy, he's 23 years old, and he does notaries for mortgages. And I never realized how much money could be made by doing notaries for mortgages. 23 years old. That's the kind of guy I want to be around. And another guy they have, and I kind of knew this was a good money maker, but the thing that's exciting to me is the young people, a young couple, they must be, maybe early 30s. I think they have one child. They have a vending company. You know, vending machines. Vending machines is a lot of money. You go to Costco and get you a couple of those boxes of Cheetos and put it in the vending machine for $3. They doing very well. They doing very well. But they didn't know anything about business. So that first year they were screwed up. They didn't, in their case, they got screwed up because they didn't take the depreciation on those machines, which we didn't even talk about. If you have equipment, you can take depreciation against those items, which gives you a bigger deduction. So furniture, computers, even your car, depending, chairs, file cabinets, shelves, all that stuff can be depreciated, which means you could take a little bit each year to offset your income. Who else? Who else? Come on. I know some good questions out there. I know it. If you got 6 or 7 people that got a business, I know there's stuff out there.
Well, I think we have absorbed a lot of information tonight, Gary.
Okay.
A lot of information, and we truly appreciate you for facilitating this session with us. We'd like to also thank Sora Regina Quince, who's our chapter's tech chair. Participants, if you look in the chat, I think a link has been put in there if you can just rate the session for tonight. And while you are completing the evaluation, we would like to hear remarks from Yolanda Haddon, who is the chapter president of Mu Lambda Sigma chapter of Sigma Gamma Rho Sorority Incorporated, and Dr. Morella McMillan Holmes, who is the chapter president of the Trenton Alumni chapter, Delta Sigma Theta Sorority Incorporated.
Thank you, Nicole. Yes, I'm Yolanda Haddon. I'm the chapter president, Basilis, of the Mu Lambda Sigma chapter, Sigma Gamma Rho Sorority Incorporated. Tonight was very, very informative. I know myself as a small business owner, I learned a lot. So we are very happy to be in collaboration with the Trenton alumni chapter of the Delta Sigma Theta Sorority Incorporated. I just want to take a moment to just say thank you to Nicole and Janelle. It was wonderful working with both of you. Made this a very easy process, and we look forward to hopefully continuing on collaborating together and providing valuable information to our community, which we serve.
Good evening, everyone. Wow. This is, can you hear me? It says unmute. I'm not unmuted. I'm unmuted, right? Okay, this one.
You're fine.
Okay, it just came up unmuted. So thank you all. First of all, kudos to the Economic Development Committee for putting this on. Thank you for your insight, your vision. The partnership, I love when Black women come together to lift us up, particularly as small business owners. So thank you so much to the women of Sigma Gamma Rho for coming and partnering with us and just sharing this. And Dr. Keel, thank you so much. Thank you for your commitment. Thank you for your service for 34 years in business, helping us. I learned so much in this hour. And I thought I was pretty knowledgeable, but wow, some of the deductions, some of the itemizations. Thank you so much for sharing your gifts and your talents and your time with us. And kudos to everyone. Just a wonderful, wonderful and impactful, knowledgeable session. Kudos, everyone, kudos.
Well, thank you, everyone. And everyone, please have a happy holidays. Happy New Year, Merry Christmas, Happy Kwanzaa, Happy Hanukkah. Just enjoy and be blessed. Thank you for joining us tonight.
Thank you, everyone. Have a great holiday season.
Thank you. Gary, if you can just stay on for a moment afterwards.
Sure.
Thank you. Okay, we are good.
Very good.
Oh, wait,
Very good.
Sigma Gamma Rho left. Darn. I wanted to get a picture. Hold on.
Thank you very much.
Okay, let me